Well, hello, dear friends and fellow trust managers. This is Mark coming to you to lay out our new wealth management program. And this is something that we're doing. It's tied into the news announcement. I think it's labeled Important Announcement regarding the temporary hold on making withdrawals from the PAM account. And this is going to lay everything out for you as to what's going on behind the scenes in that regard, okay? So you have a full understanding and hopefully can appreciate the benefits that will be derived from that, okay? So we'll call this our wealth management program. It's obviously geared for growth and protection. It always has been. That's always been the goal, all right? And you know that the trustee's number one responsibility is to grow and protect those assets. That really is, as they say in Star Trek, the prime directive, okay? So we got to keep that in mind. And it's always a priority to manage risk as much as possible, and that comes through diversification. And as you've seen in your own PAMS account for the trust, that is often divided up into dollar, euro, cryptocurrencies, gold, silver, various trading systems that we're involved in or with. And so that's been a goal from day one, is diversification and spreading that risk. We know it's a very risky world that we live in right now. There's risk everywhere, even where you think there is no risk is probably the greatest risk. For example, putting your money in a bank. Don't get me started on that. Much more risk than people perceive these days. So that's always paramount. But we've had some problems that have come up from several of our third-party partners. I just want to cover that quickly with you. One of those was SoftTrade AI, and this was a trading program that used a combination of manual trading and artificial intelligence algorithms to generate daily profits. Okay, so we gave that a try for a while. Everything was working smoothly, very fine, just like clockwork. Long story short, end of the day, they closed the program and kept the money. Apparently, the story goes that the trader incurred losses. He was doing everything he could to recover that, and it didn't happen. So whether or not that was true or it was just a scam, nobody really knows. But those funds were gone, okay? We were involved in Cloud 2.0, still are, in fact. Cloud 2.0 has its own ecosystem of products and services, one of which is a cryptocurrency wallet. And what was most interesting to most people for joining the program was what they called Jarvis, was an AI arbitrage trading program. Arbitrage is always interesting because there's really no opportunity for loss. If you're not familiar with that term, it's simply a matter of taking advantage of price differences between exchanges. So if you've got an account in one exchange where the price is lower for Bitcoin, then you have an account in another exchange with a higher price. You buy at the lower and you sell that from the low price exchange. You sell that to the high price exchange and you immediately capture a profit. Those profits are often very, very small, but being that it's generated on an automated basis, computers, there can be thousands of transactions adding up on a daily basis. And so we were involved in that, still are. Jarvis was doing very, very well for a pretty good period of time until the regulators stepped in and says, hey, wait a minute, what you're doing is securities. You can't do that. And so Cloud 2.0 has had to totally reconfigure their entire program, and the funds we have locked up there to this point, we're not able to get out. Not sure where that is headed or what the ultimate resolution is going to be, but funds are tied up there. All right, then there's Amfeix. Amfeix, a very interesting concept, a blockchain fund, and had a flawless test period where the system was tested for 8 months before we introduced any other funds. This was done privately. The 8 months private test was very good. They delivered the returns just as advertised. Then a withdrawal was requested. It was made, no problem, promptly. Funds were taken out, and after 8 months, that was looking very, very good. So with that successful test, we rolled back in with several Bitcoin, and feeling very confident that we had a very good system on our hands. And now that is making it impossible. That program is not returning funds. Not sure what the future may hold, but for about the last 6 or 8 months, we've not been able to get our funds out of there. So the due diligence was done, the tests were made, everything looked great, and voila. A certain point in time comes up, it seems, with some of these programs, and they seem to have a limited time span. Same thing with Kangot, almost an identical situation. So there's Bitcoin tied up in Kangot. And our biggest investment was the Carat Bars KBC coin. The KBC was the precursor to the mainnet launch of their proprietary digital currency, cryptocurrency, which was to be backed by gold. And in this scenario, the KBC had been trading at one point up around 12 cents per coin. We were getting in at around 4 cents, which we felt was an extreme bargain, very fortunate, because the corporate plan was to back the KBC, or the new mainnet coin, which the KBC would convert to. It would back that up with gold, so that one crypto coin would be the equivalent of, 100 KBC, or its mainnet equivalent, would equal 1 gram of gold. So that was putting the price at around 60 or 70 cents, when we were getting in at around 4 cents. And so Carat Bars had always delivered on what they said they were going to do. For 11 years, I had personally been involved with them. They've always delivered, and this was really a revolutionary concept to back cryptocurrency with gold, which is their main forte, is gold products. And so we pumped in several $100,000 into this, which at the initial conversion rate, when it was converted over, not counting any future growth, would have made that investment worth several $million. Well, again, regulators stepped in, says, no, sorry, that's a security, you can't do that. So Carat Bars decided to split a utility coin and also have a security coin backed by gold. Well, the utility coin has come out. The KBC was converted to the utility coin, which is brand new in the market right now, and essentially our investment is worth about 1% of what we put in. So again, no telling what the future holds, but it's going to be hard to make that up. All right, so that was a huge loss. Very unfortunate. So on the trading side, here's just one example. You can see in the upper left, there's a channel, an upward trending channel. And you can see where we entered with 50 lots at one point at the lower end of that channel, which is a textbook entry level. Very happy about getting that position. Market came down even a little bit further. And so we took another 25 lots there, expecting the market to go up, which it had been doing for quite some time in that channel. And you can see the support totally collapsed, and a fairly long-term downtrend has ensued. And so that has blocked a significant portion of equity in the trading accounts. Gold will recover. There's absolutely no doubt about it. It's simply a matter of timing, but that has also affected available equity. For those of you involved in the trading side of things, you've heard me talk about this previously. Okay, so these are a combination of events that really has created a pretty good-sized dent in the holdings that we have behind the accounts in the PAM system. So this is something that needs to be fixed, right? So the solution is this. We need to put together, and we have, a proactive capital management plan. All right? And that plan includes the consolidation of capital. We need to put funds together, use those funds in such a way as to get maximum return. All right? To repair that dent. All right? One of the things that we need to do is to reduce third-party risk and keep the assets in-house. We've unfortunately found out what can happen when you turn funds over to third parties. It's been pretty much an absolute disaster with the ones that I just mentioned. So that has to be done, all right? Minimize third-party risk, manage funds ourselves, all right? And so in this growth period, we've got to really hold off on transfers going out so that we can maintain the bulk of capital working to grow, okay? I think that makes perfect sense. And the strategy involved with that is this, all right? We're in the process of establishing strategic positions in key markets, all right? There's going to be less trading activity and more positioning in those markets, more establishing positions and riding the wave, what we expect to be a very serious trend, and holding on to those positions, all right? So it's pretty much a buy and hold or hodling type of deal, but as we gain profits on the positions that are established earlier, we can leverage those profits into additional positions at the optimal time. And so that's going to involve some timing and strategic analysis, technical analysis to time that properly so that we can maximize our positioning in the markets, at strategic levels. So to do this, we identify the markets that are most likely to trend and or just outright explode. Okay? We're not interested in trading the standard markets on a daily basis. We're looking for trends, the maximum trends, and we've got a pretty good idea, and I'm sure you probably already do too. Okay? That's going to be Bitcoin and Ethereum, as well as some key altcoins that have 10x, 50x, 100x potential. All right? And believe it or not, despite recent downtrends, gold and silver are going to explode. There's a lot of reasons for that, and I'll show you why and where you can go to get more information on that. Okay? But so gold and silver, we're not entering as of yet, but we're watching those markets and waiting for the right time to catch a parabolic move, okay? And that's all based on technical analysis and fundamental analysis, what's going on in the world, economics, what the Fed is doing with money printing, so on and so forth, okay? So these are the key markets that we're looking at. Doesn't mean these are the only markets, but these are the ones we're most interested in positioning ourselves to catch what we expect to be parabolic moves, all right, for maximum gain. Here's an example, all right? This is a stock to flow chart, cross-asset model, and what that means, what that is, this measures capital flow from one asset to another, and it compares, in this example, what's happening to Bitcoin in terms of capital flow based or compared against other assets. All right, so how much money is flowing into Bitcoin as opposed to how much is flowing into the gold market, for example, okay, or other assets. And so we can clearly see a pattern here, how the stock to flow, how the capital flow has been moving into Bitcoin and how that has been affecting the price levels. Okay, so without getting into a detailed analysis of this chart, this basically all we need to understand right now is that money is flowing into Bitcoin big time. Institutions are getting involved, large banks, hedge funds, pension funds are now getting on the bandwagon when for the past number of years they couldn't downmouth Bitcoin enough, trying to scare people away from it. They finally realized they weren't going to accomplish that, so they better get on the bandwagon to bolster up their own balance sheets. So this is the stock to flow model. Money's flowing into Bitcoin, which is just one of a number of reasons why this trend is happening. And you can see, this is an older chart, but you can easily see where it's headed, okay, when that pattern continues. Then we can look at the post-halving rallies. If you understand or don't understand halving, every 4 years, the Bitcoin miners who process Bitcoin and create new Bitcoin, their rewards or premiums are cut in half, which means the output of new Bitcoin is cut in half. So what do we see happening? We see mass adoption starting to happen, as I just mentioned, big money starting to flow into Bitcoin, when at the same time the supply of new Bitcoin is restricted or cut in half. And so that just naturally drives the price upwards. And you can see in the previous, here's 3 different halving cycles going back to August of 2012. You can see the pre-halving had an increase of 468%. The post-halving, after that halving, there was an increase in price of over 9,000%. Look at that. All right. There was one in February of 2017, and there was one just last year. Actually, I believe it was May, not February. So you can see this is a very conservative price target of 115,212, and that's about double the price of Bitcoin as it stands right today. Okay, so if that's all it does, then we're looking at Bitcoin to double, and so the only question is, how many can we control in the market with our leverage in our trading account, and how quickly can we position ourselves? Okay, now again, that's a conservative target, and you can see many videos on YouTube that are talking about price targets that are much, much higher than that, and they will be over time. Okay, that's just the question. Over what period of time will that happen? So here's another chart that's very interesting. All right, the purple line on top, this shows after the first halving in 2012. Okay, the green line on the bottom shows the last halving in 2020. Now the yellow line in the middle, that's the average. Okay, and then you can see on the left-hand side, kind of a bluish line, that's the current price level. Now all of these lines are adjusted for the current price. So what they do is they measure the percentage of gain based on the price at the time, and then they convert it to today's prices, Okay, starting, you can see it on here, starting at around $10,000, when in fact that first purple line actually started in real-time pricing probably at around $800. Okay, but so this is converted into real-time pricing. So you can see the blue line on the left-hand portion. It started out slightly above what the 2017 price chart was doing, but then it quickly rose above the average, the yellow line. You see it rise above the yellow average line, and we're currently above that yellow average right now. So you see it's gained momentum substantially since the beginning, since the halving, all right? And this, I think, represents the Teslas coming in with $2 billion purchases, and the banks and the hedge funds, okay, all having an effect. So you can clearly see that the price pattern is very similar from one halving cycle, 4-year cycle, to the next halving cycle. And so this can give you some idea of where the price of Bitcoin could very well be in the months ahead. Okay? This one shows a peak at around 300,000 before it pulls back after reaching a peak. All right, so that just gives you some idea based on historical analysis compared with the current activity and the patterns involved. Okay, so just to give you an idea, I don't want to get too far into technical analysis, but this gives you just a small glimpse into why we feel the way that we do on these things. So then on gold and silver, you should know about Bo Polney. He doesn't analyze the markets. He's not a trader, although his analysis of time cycles does apply very well to the markets. And he talks a lot about the markets. He talks about Bitcoin, gold and silver, and other things. Okay? So he's not a trader. He's not a financial analyst. He's a time analyst, and you can see some very interesting analysis that he's done as it relates to Bitcoin, gold, and silver. Now, on gold and silver, he says, yes, gold will be going parabolic based on the cycles of time, but silver will outpace gold to a significant degree, and that's very interesting. Okay, so again, just one analysis of many that we could share with you. I'm trying to just show you a little bit of substance behind why we're doing what we're doing. Okay, so then you might ask, well, why not just buy and hold this myself? Okay, first of all, there's a high level of volatility. All right, you know that. BTC has often had pullbacks of 30-40% or greater. And our trade platform can do shorts, sell short, and which enables us to hedge those positions. So the shrinkage on the pullbacks is less, and even profit on those pullbacks. Okay. Now, professional traders and technical market analysts in our circle are watching the market for hours every day, so that they can get the optimal entry points when adding new positions. All right, and then it comes down to leverage. The trading platform can give us some leverage. We don't go highly leveraged with Bitcoin. It's a low, lightly leveraged position, which enables us to benefit from more positions using less equity. Okay, so those are some of the advantages that we have. Now, something new is that some relationships have been established with a network of very, very successful business people. These are very high net worth individuals. And they have a completely different outlook on financial planning. And they've already made their money. So they're not particularly excited about taking on more risk for bigger gains. Okay, they're interested in preserving what they have, keeping it away from predators, and if they can get a decent, long-term fixed rate growth, they're happy with that. So this is a program we'll be introducing to this network, and as you know, the real rate of return is going to be much higher than what that fixed rate will be. So let's just say they're excited about 8.5% annual interest. Well, in the real world, we can generate, in most instances, 8.5% on a monthly or weekly basis. So that gives us the rest of the year to trade on those funds and make profit. All right. So this spread then is going to be used to help us fix that dent. All right. So it's going to be more than just the activity and the trading and the positioning and the growth of asset value. This spread is going to help fix the dent along the way. Okay, so this is an entirely new and different source of recuperation, if we can call it that, for the problems that we've suffered to date. Okay, so the new emphasis is really on growing and building generational wealth. Okay, long-term wealth development, and that's the way it really always has been. Although I know many of us have been looking, for short-term profits and cash flow. So that's a shift in emphasis and priority, I guess, between the two. Right. So just to have some clarity on that, I think makes a lot of sense. And so it's important to understand here. Some people may get a little confused that, MMG is not a bank. Not in any way, shape, or form. Never has pretended to be, never has put itself out to be. It's a trust company. And the trust account in the PAMS, Private Asset Management System, is not a bank account. So you know that banks offer demand accounts, which are checking and savings, and those funds are available upon demand. Okay, MMG is not that. A trust account is to hold and preserve assets, which then are to be used to suit the expressed purposes of the trust. Okay, this is really going back to the purest definitions that we have in terms of the primary purposes and use of the trust. Okay, so naturally it's the trustees who are responsible to see to it that the terms are honored and the purposes are achieved. Okay, so it's important to keep that perspective in mind. I know that for a long time we've had the luxury of being able to send funds out for business purposes, right, for the trust, pretty much as needed. But in view of the new capital management plan, we're going to shift our emphasis and our focus a little bit and make those adjustments. So I hope you can appreciate that and understand what we're trying to do. So then the next question comes up: when will distributions be declared? Okay, fair question. When the dent is fixed, number one, all right, and we expect that'll be later this year, perhaps third quarter. We're already in the second quarter, aren't we? So time is flying by so fast. And when half of the gain thereafter allows a minimum of €1,000 to be distributed per trust. And so at that time, each trust will have the option of receiving the distribution or rolling it back into the growth account. Now, that's not to say the distribution will be €1,000. That's just the minimum level before it's triggered. Okay? So that gives us a clear picture on what to expect. So there we go. A few more details. In the PAMS account, current assets held there will be converted to a value which is denominated in euro as of March 1st, which is when the initial announcement was made in the news section. I think it was titled Important Announcement. Hopefully you saw that. And a new and separate fund account will appear in the PAM system reflecting this initial value. Okay? So the next point, the brokerage account where the various assets will be managed, all right, on the trading side, Bitcoin, silver, gold, Ethereum, that account is denominated in euro, okay? So we want to, match that up so it's basically in sync, the PAM's account with the euro value of the trading account. That's just going to make things a lot easier and keep people from getting totally confused, okay? So once capital is fully restored, we get that dent fixed, and the gains start accruing, then this will be noted on the account you'll see in the PAM system, and this will be updated monthly, okay? So that should answer a few questions that would naturally come up, all right? So all I want to do is thank you for your attention in watching the details on this video. Thank you for your participation, for your understanding, for your cooperation. This world is a very tricky place these days, and we have to really be on our toes to manage it well, and we're doing everything we possibly can on our end, and God willing, good things are in store for us coming up not too far down the road. So I will leave you with that. Take care, God bless, and hope to talk to you soon. Bye for now.